Hello there and welcome to today's forecast. I'm joined on the line with Paul Bratby, an active trader at wave5trade.com, to discuss his 1, 3 and 6 month forecasts for the USD CAD currency pair. So Paul, what is your 1 month forecast for this pair and the effect that you think Yellen's testimony on Tuesday will have had on this?
Well, we've had good news after good news from the US after lower than expected unemployment claims last week, and then Yellen's desire to keep interest rates low, as she stated yesterday. The tapering is moving at a sensible and steady pace. The markets are now embracing that. And her statement of the economy improving but recovery not yet complete. We had the normal Janet jump yesterday, where a US dollar across the board did very well, which has helped fuel the momentum started from last week, where the price bounced off a long-term trend support level, going back from September 2012. So I see the main target for the next month is to break through the resistance level at 1.080 and then consistently close above it. I mean, that's my target for the next month.
Canada's existing home sales and manufacturing shipments figures are on the cards for release this week, whilst Friday sees the publication of Canada's inflation data for June. How do you forecast this affecting the USD CAD in the next 3 months?
Okay, well, the home sales looks like there's no real increase. The term remains balance is being used a great deal, so no real shockwaves there that will affect the pair. The first quarter decline in manufacturing jobs and slower shipments may continue into the second quarter as the June manufacturing jobs already fell. So the shipments probably will remain relatively low. So again, no positive news for the Canadian dollar there. The inflation rate is at 2-year high at the moment, but is expected, I think, to remain around about the 1.7% below the BOC 2% threshold. However, any obviously surprises with a higher inflation rate could fuel the current US dollar drive higher. So no news that could slow down this current momentum of the US dollar getting stronger. So we see the target in the next 3 months around 1.103, which is the next major resistance for this currency pair.
With the loonie down 0.15 of a cent compared to 93.18 cents US, what do you expect to see at this evening's Bank of Canada interest rate decision, and how do you see it affecting this currency pair over the next 6 months?
Okay, the BOC rate decision is expected to remain at 1%, which have no real impact on the pair, as many other factors in play from the US side is really affecting the pair. Of course, if the inflation figures do go above the BOC threshold of 2%, then an increase in the interest rates could be on the table earlier than the much talked about 2015 timetable, which could see the US dollar gaining more strength. So for me, it's all about the US dollar at the moment. It's stronger data coming from the US compared to the lackluster data from Canada, which could see the pair rise to around 1.140 to around 1.150 by Christmas, which again is the next major target if you look at a weekly chart.
Well, thank you very much, Paul, for all your insights. That's all we've time for on today's forecasts, but be sure to tune back in on Friday for the next episode with Ben Jones. Goodbye for now.